The COVID-19 pandemic has had a serious effect on our economy. It's also had a serious effect on the way we live. I'm in the car doing this right now because it's complete mayhem in the house with the kids. But how has it affected the commercial real estate sector? More importantly, what's next? So Conor, it's compared to the last time we spoke, a lot has happened. How have you found the last 3 or 4 months?
The last time we spoke, we were coming off a record year. January, February, March this year. Again, we're very, very strong figures. We had 700 million traded in the investment market, 1 million square feet in the office market. Basically, the lights were switched off on March the 18th, and nothing's really happened over the last 3 months, I suppose. It's been very difficult to do business in the climate we are in.
From late February and early March, we witnessed several transactions either be paused, restructured or withdrawn. This has created an element of uncertainty within the market. And there's one thing which investors and vendors don't like, and that's uncertainty, as it often tends to lead to inactivity. However, now with the loosening of the guidelines, we've noticed a significant uptick in terms of the numbers of those parties who want to get in, look at buildings. So that is encouraging, but ultimately we need to see those progressing to actual bids and properties and transactions.
How different is it now in terms of the banking sector compared to what it was before the lockdown happened?
Yeah, well, I'm talking to the banks every day, and understandably there's a lot of uncertainty there. What we do, John, is we look at it from the requests for Red Book valuations, which is the best barometer of activity in commercial lending, and tells us that the banks continue to lend right throughout the COVID period.
What sort of details are they looking for before they'll actually release the money?
Things like, the capacity to generate income from the business, the tenant profile, the sector of the market. And on a case-by-case basis, it's been very encouraging to see how pragmatic the banks have been over the course of the last 3 months. And when 2020 comes and goes, I would not be surprised if year-on-year lending was on a par with 2019 as the banks, begin to play catch-up.
So Paul, you've been in the valuation game for a long time. Is it possible to do valuations now?
Yes, it is. I'm just back from Galway last week, where I undertook a number of valuations. Slightly changed circumstances in terms of you're wearing PPE equipment, but essentially you're undertaking the same process.
Which markets have been hit the hardest in terms of valuation?
The retail sector has undoubtedly suffered greatly. It already was in transition. And you were seeing a number of large retailers come out of the marketplace, business failures, and that's going to create gaps in the high street. It's an evolving situation. We'll just have to wait and see whether people get back into going back out to shop.
In terms of offices, it's very difficult. A lot of people talking about the office market, working from home, the impact that might have on the office market. Yeah, people can work from home, and it does work, and we've all done it now, and I'm pleased to say, it works for our office here, and I'm talking about my own experience. But from what I hear, with kids in the house and with dogs running around and with the various different things happening in the house, a lot of people do miss the office. What the office is it's kind of the soul of a business. It's where people can socialise, it's where they can collaborate. I'm not so sure that the office market will be as hit as people think it might be. In terms of rent, companies may need more space in town because densities will reduce. So, when they had 100,000 square feet and had 1,000 people work in it, they might now need 150,000 square feet to accommodate 1,000 people. So that's another argument maybe that will lead to more demand.
I mean, people are tied into leases and everything. They just can't walk away from it straight away. So do you think that'll help you kind of get through this?
It would probably impact more on the SME market, but the larger scale occupiers who would typically sign lease terms of a minimum 12 to 15 years now in new buildings, we don't see any evidence of a collapse in rental values in the office market.
I think a lot of people are kind of looking back at the financial crisis of 10 years ago. But how different is the COVID crisis compared to that?
The difference between now and the previous recession is that was caused by a lot of, bank lending into the property sector. This time it's very, very different. What's happening in the market has been forced upon us as a result of a health crisis, which has affected every single sector of the market globally. It's now turning into a financial crisis because we've literally got to get the economy back up and running. I think the big issue for us all is the employment shock. How quickly those jobs that are lost get back.
So the last time we spoke, we ended by me asking you what you predict is going to happen. You're quite positive.
Yeah, I was. And
You weren't sure whether you were going to eat
I
those
got that
words or
wrong. I
not.
didn't predict the global pandemic, and I do apologise to everyone. Very different. I mean, look again. Let me talk about the retail market. You know, retail. We were saying this at the start of the year. It is changing. It is evolving. When it's shut down for a 3-month period, it does not help things. So we could see higher vacancy rates, lower rents, and maybe enhanced yields. So capital values will collapse. I think the office market, let's watch it and see what happens. But there's 1 million square feet plus of inquiries still in the Dublin office market chasing what is, not a lot of product. So, my guess is that rents won't be impacted that much, but perhaps rental yields or investment yields will be impacted slightly, which will bring capital values down very, very slightly.
What is also interesting though is that some of the unintended consequences have been a flight to some of the less trendy assets. Supermarkets or a well-located corner shop, things like pharmacies, things that have actually remained opened during the pandemic and proved to be resilient, along with obviously traditional state-led or government-backed assets.
I think the industrial market is going to remain strong. Again, very, very undersupplied. And I think PRS and the residential sector will remain strong. I mean, look, there's still a lot of people out there chasing that kind of asset. We do need houses in Ireland, and certainly the rental market as things stand at the moment is strong.
I think you will see a noticeable pickup in Q3 and Q4. What are we basing that on? A hunch. There is a large number of unknowns. How people are going to come back in, what disposable income they'll have. Are you going to have companies downsizing?
But I think if we can have good level and quality of bank lending, the employment shock is not as dramatic, and investor sentiment stays positive, I think then, this time next year, we might be back to where we were on the 10th and 11th of March this year, when, certainly from a commercial real estate perspective, we were all geared up for another strong year and strong performance.